Section 1. Flat tire, empty wallet. A familiar story? We've all been there. Picture this. You're driving to work and suddenly your tire goes flat. A flat tire is annoying enough, but then you realize you don't have enough money to cover the repair. What do? This is just one example of life's unexpected events that can throw your finances off track. Without an emergency fund, a simple flat tire can become a major financial headache. It could mean going into debt, missing bill payments, or even having to borrow money from friends or family. An emergency fund is like a financial cushion, protecting you from life's little and big surprises. It gives you the freedom to handle unexpected expenses without stressing about where the money will come from. Section 2. Your safety net. Why an emergency fund is crucial. Life is unpredictable. Job loss, medical emergencies, car repairs, these things happen, and they often come with a hefty price tag. Without an emergency fund, you're vulnerable. Imagine losing your job unexpectedly. How would you pay your rent, groceries, and other bills without a financial safety net? An emergency fund provides a temporary lifeline, allowing you to cover essential expenses while you search for new employment. It's not about being pessimistic. It's about being prepared. An emergency fund empowers you to navigate difficult situations with less stress and more financial security. It's about taking control of your finances and building a solid foundation for your future. Section 3. Size matters. How much should you stash away? There's no one-size-fits-all answer to this question. The ideal size of your emergency fund depends on your individual circumstances, such as your monthly expenses, lifestyle, and dependence. A general rule of thumb is to aim for 3 to 6 months' worth of living expenses. This means calculating how much you spend each month on essentials like rent, utilities, groceries, and transportation, then multiplying that amount by 3 to 6. If you have a stable job, relatively low expenses, and no dependents, you might feel comfortable with 3 months' worth of expenses. However, if you have a family, a mortgage, or a fluctuating income, aiming for 6 months or more is a wiser choice. Section 4. Piggy bank or high-yield savings. Where to keep your emergency fund? Now that you know how much to save, where should you keep this money? The key is accessibility and safety. Your emergency fund should be readily available when you need it, but it shouldn't be subject to market fluctuations or unnecessary risks. A high-yield savings account is an excellent option. These accounts offer a higher interest rate than traditional savings accounts, helping your money grow while remaining easily accessible. Look for FDIC-insured accounts for added security. Avoid investing your emergency fund in stocks or other volatile assets. While these investments can offer higher returns over the long term, they're not suitable for short-term needs. You don't want to be forced to sell investments at a loss when an emergency arises. Section 5. Building your fund, making saving a habit. Building an emergency fund doesn't happen overnight, you know. It requires discipline and a commitment to making saving a part of your financial routine. Start small and build momentum over time. Set a realistic savings goal each month, even if it's just $50 or $100. Treat this savings goal like any other essential bill, and make it a non-negotiable part of your budget. Automate your savings by setting up a recurring transfer from your checking account to your emergency fund savings account. This takes the effort out of saving and ensures that you're consistently contributing to your fund. Section 6. Windfalls and side hustles. Turbocharging your savings. While consistent saving is essential, you can accelerate your progress by taking advantage of windfalls and exploring side hustles. Windfalls are unexpected sums of money like tax refunds, work bonuses, or gifts. Instead of spending windfalls on discretionary items, redirect them to your emergency fund. This gives your savings a significant boost and helps you reach your goal faster. Consider taking on a side hustle to generate extra income specifically for your emergency fund. Whether it's freelance work, selling crafts online, or driving for a ride-sharing service, a side hustle can provide a dedicated stream of funds for your savings goals. Section 7. Unexpected vet bill? No sweat. Let's look at some real-life examples. Remember that flat tire scenario? With a healthy emergency fund, that situation becomes much less stressful. You can simply pay for the repair without worrying about how you'll afford it or whether you'll need to go into debt. Imagine a medical emergency. You might face unexpected medical bills, even with health insurance. An emergency fund allows you to cover these costs without jeopardizing your financial stability. Having an emergency fund also provides peace of mind during job loss. It gives you a financial buffer while you search for new employment, allowing you to focus on your job search without the added pressure of immediate financial distress. Section 8. Emergency fund versus other savings goals. Don't confuse the two. It's important to distinguish between an emergency fund and other savings goals, like saving for a down payment on a house or a dream vacation. These goals are important, but they serve different purposes. Your emergency fund is your financial safety net for unexpected expenses. It's not intended for planned expenses or long-term goals. Keep these funds separate to avoid dipping into your emergency savings for non-emergency situations. Create dedicated savings accounts for your other goals, labeling them accordingly. This helps you track your progress and ensures that you're allocating funds appropriately for each purpose. Section 9. Tapping into your emergency fund. When and when not to use it. An emergency fund is there for true emergencies. These are unexpected events that require immediate financial attention, such as job loss, medical emergencies, car repairs, home repairs, and unexpected travel expenses. Avoid using your emergency fund for non-essential expenses like a new TV, a vacation, or a shopping spree. These expenses can be planned for and saved for separately. If you do need to use your emergency fund, replenish it as quickly as possible. Make it a priority to rebuild your savings back to your target amount so you're prepared for the next unexpected event. Section 10. Your financial fortress, peace of mind, and a brighter future. Building an emergency fund isn't just about financial security, it's about peace of mind. Knowing you have a financial cushion to handle unexpected events reduces stress and anxiety, allowing you to approach life's challenges with more confidence. It also empowers you to make better financial decisions. Without an emergency fund, you might feel pressured to take on high-interest debt or make impulsive choices when faced with an unexpected expense. Start building your emergency fund today, even if it's just a small amount. Every dollar you save brings you closer to financial security and a brighter future. You've got this.